Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, a very good morning. You're watching Power Breakfast on CNBC TV18 in the Mumbai News Centre. I'm Ekta Batra and with me is Mangalam Malu. Well, it turned out to be a down session for us in yesterday's trading session. And we had quite a lot in terms of flows because of obviously the Bharti Airtel deal probably skewing the figures. But nonetheless, lots to look forward to today. We have Tata Motors and the likes of Aurobindo which will be releasing numbers. So lots of cues lined up.
Absolutely, lots of cues lined up, and also the US markets, they posted yet another record high in trade yesterday. We keep an eye out on all of that, but here's a look at all the top stories that we're tracking at this point in time.
Deal probably skewing the figures, but nonetheless, lots to look forward to today. We have Tata Motors and the likes of Aurobindo which will be releasing numbers. So lots of cues lined up.
Absolutely, lots of cues lined up, and also the US markets, they posted yet another record high in trade yesterday. We keep an eye out on all of that, but here's a look at all the top stories that we're tracking at this point in time. US markets, they post record closing highs as a surge in technology shares made up for the weakness in financials sparked by concerns that tax bill faces an uphill battle in Congress. Japan leads gains in Asian markets ahead of China inflation data.
Two-day GST meeting begins today. The Council will consider reducing the 28% tax bracket for the liberalization of the composition scheme, also on the agenda.
Tata Motors' second quarter profits seen up 64%. This is despite potential 400 crore loss in the standalone business. Jaguar Land Rover is expected to report a 22% decline in profits as the margins may remain under pressure.
Petnet LNG posts a strong quarter. Volume surged 14.8% sequentially against a 1% expectation. Profit at 588 crores.
And Himachal Pradesh goes to polls. The BJP and Congress lock horns in 68 constituencies. Can the BJP oust the government of Congress strongman Veerbhadra Singh? All right, before we go into trade for our own markets, here's a look at how the Asian markets have panned out. The Japanese index, that one is up almost 1%. This, remember, is ahead of the Chinese inflation data. We're getting some strong cues come by from the US markets as well. Technology stocks, they led the gains. But another thing that we're seeing is a mild bit of weakness in the dollar yen. And that is primarily on account of the current account surplus data that came in from Japan, which was a tad bit below expectations. Investors are also keeping an eye out on President Donald Trump's visit to Beijing. The SGX Nifty, that one indicates a start with a 7-point uptick as we speak.
Okay, well, in the next leg of his Asia tour, US President Donald Trump is on a visit to China. Trump's meeting with Chinese leader Xi Jinping is the most consequential of his entire Asia tour, as Washington desires more help from Beijing in insulating North Korea amid its nuclear provocations. He will also be looking to talk on trade with China. CNBC's Yun Yoon reports on the same.
It's going to be a very busy day for the two presidents. They're going to be sitting down later this morning after the welcoming ceremony for a bilateral where they're expected to discuss not only North Korea, which we've been talking about for quite some time, and also the trade deficit. The U.S. Commerce Secretary Wilbur Ross had a signing ceremony across town with his counterpart, the Vice Premier Wang Yang, and the two of them announced $9 billion worth of deals, including a $1.2 billion deal by JD.com, the Chinese retailer, which said that which pledged to import $1.2 billion worth of meat, including beef, to China. Now, the other thing that the two of them had said at that point was that this was just going to be a warm-up for today. So people today are expecting to hear even bigger announcements when it comes to these types of deliverables.
Okay, well, that's what's happening with the Asian tour of Donald Trump. But on Wall Street, the major stock indices finished slightly higher and eked out record closing highs. But bank shares fell amid growing concerns that Republicans plan to cut corporate taxes may not win congressional approval as early as expected. However, gains in technology shares helped push the U.S. stock markets to record highs yet again. CNBC's Aditi Roy gets us a wrap of all what took place on Wall Street.
U.S. stocks closing the day at record highs. The Dow rising a fraction of a percent. The S&P moving higher by 3 points, and the Nasdaq tacking on 21 points. A new twist in merger efforts between AT&T and Time Warner, with the Justice Department asking that AT&T sell either DirecTV or Turner Broadcasting, which includes CNN, in order to get regulatory approval for the $85 billion merger. AT&T CEO Randall Stephenson saying he has not offered nor does he intend to sell CNN. Humvee maker AM General is suing Call of Duty developer Activision over its use of Humvee images in the popular video game franchise, which Activision says was the world's largest last year. AM General accusing the game studio of raking in billions of dollars by incorporating Humvee trademarks without permission. Uber's futuristic plans may be taking off. The ride-hailing service announcing today that it signed with NASA to develop software which it aims to use for a flying taxi service, modeled after the terrestrial ride-sharing industry, which Uber already dominates. The company aiming to debut the service as early as 2023. That's the action from the U.S. market. You have a good trading day in India. Back to you in Mumbai.
All right, with that, here's also some opinion coming in from Barclays. That's on the Fed rate trajectory and the road ahead for the U.S. market itself.
Fed has hiked several times since the election, and banks for many years, the thesis was you want to buy banks because rates are going up, and they didn't. Post the election, the Fed has hiked several times and is slated to continue to do so. So that's probably been the biggest driver of performance, because you've seen earnings growth accelerate. The other fiscally stimulus stuff the administration's working on, whether it's tax reform, infrastructure spending, et cetera, anything that helps drive the economy would certainly be beneficial to bank stocks. Trading revenues, have been really under pressure all year. The first couple of quarters of this year, they've been lower. Fourth quarter, I think, is off to another challenging start, and could see, double-digit year-over-year declines persist into Q4 against tough comps. At the point where volatility can't get much lower, but to the extent you start to see the Fed raising rates and get some of this stuff done, hopefully that brings some volatility back to several asset classes, which would help trading results over time.
All right, across Europe, the stocks ended mixed as investors digested some latest earnings reports coming by. The British FTSE rose about 0.2%. Germany's DAX, that one ended flattish as well. The French CAC, however, that one slipped about 0.2%, and that was on account of weak earnings coming in from a couple of these automakers. The auto stocks, that one really led to the losses in the French index. But sharper cuts were seen across the periphery. If you take a look at the Italian index, the Greek ATHEX, as well as the Spanish IBEX, all of them saw cuts of almost 1%. If you take a look at the ATHEX as well as the FTSE MIB, that one down almost 0.8%. The Portuguese market's down to about 0.5%. In the emerging market space, though, the Russian index, that one added further to the gains that we saw yesterday, about 3.5%. So 0.3% gain seen there. The Brazilian index, day before yesterday, saw a cut of 2.5%, recouped most of those with a gain of 2.7% yesterday.
Okay, well, let's tell you about the currency space. The dollar has slipped to more than a one-week low against the yen, pressured by worries over possible delays to Donald Trump's tax reform plans. U.S. House of Representatives Speaker Paul Ryan left the door open to a possible delay in implementing a huge corporate tax cut following a Washington Post report that his fellow Republicans in the Senate are exploring the option.
In the world of commodities, crude oil prices hold steady after briefly spiking yesterday. This, as the government data showed, gasoline and distillate inventories, they fell more than expected, offsetting a surprising rise in the U.S. crude stocks as imports, they increased. Now, yesterday on Dalal Street, it was the second day of decline on the benchmark indices, with both the Nifty and the Sensex losing almost 0.5%. The Nifty, though, was helped by a late minor short covering that propelled the index above that 10,300 mark. Let's see what happens in today's trading session. Ekta, the last two sessions we've lost about 150 points on the Nifty. What's the setup for in today's trading session?
Yes, that point should be actually taken into cognizance, that we've just lost around 2% from the top for the markets. For this entire week, the Nifty is down around 1% The mid-cap index has also corrected a little over 1%. And, you know, that we should put that into context that, yes, while we have been underperforming the global markets, we're still above 10,000. We're still hovering close to those all-time highs that we saw and almost went to around 10,500 just earlier in the week itself. But nonetheless, for today, just to talk about the picture for and the setup for today, the flows, for example, for yesterday's trading session were quite skewed because of the Bharti deal. So FIIs net sold around 3,838 odd crores and the DIIs bought over 3,000 odd crores. But if you put it into context, FIIs have bought and DIIs have sold in 4 out of 6 sessions, and you're including the aberration that we saw in yesterday's trading session. It just gives you a sense that maybe DIIs are now taking some money off the table and FIIs are putting it back into the market at this point in time. So maybe that's something that we need to monitor in terms of maybe DIIs pulling out money is probably hurting sentiment a little bit on the fringe. But like I mentioned, the Indian markets are also underperforming the globe this week. So for example, the Nikkei has been up around 4% The Shanghai markets have rallied around 1.5%. We all know that Dow is at record highs. And overnight, the US closed higher as well. We had crude, which was around $64 per barrel. And I think that continues to be a concern, an underlying concern for us, that maybe if crude starts inching up, especially with the problems, the political problems that are taking place in Saudi Arabia, that might be a concern on the fringe for us in terms of macros, in terms of inflation, and probably stemming the expectations of the RBI probably cutting rates further. Now, watch for profit booking in Reliance Industries, because now that's corrected around 6% week to date. We have the weekly Bank Nifty option expiry today as well. But besides that, watch for profit booking in banks in general. Yes Bank, which is down over 6% week to date. SBI, which is down around 4%. And lot of earnings to watch out for today. Aurobindo, Tata Motors, they'll be post markets. HPCL, Amara Raja, Granules, India Cement, Page Industries, SAIL, Dr. Lal's, all of these numbers which will be coming out. Saturday is Larsen & Toubro, and Friday, tomorrow, is SBI. So watch for any sort of movement ahead of those numbers as well.
All right, Ekta, thanks a lot for that. But in terms of the other stocks that you're watching out for in trade today?
Well, lot of earnings reactions, so I'm just going to stick to that. So we have Bombay Dyeing, where the net profit was 53 odd crores versus a loss of 36 odd crores. Shree Cement, where the profit was down 27%. Meghmani Organics net profit was up 69%, so that's positive. Vardhaman Textiles profit was down 70%. Harita Seating Systems profit was up 21%. Thermax profit was down around 7.8% year on year. GSFC, Jindal Drilling and Industries, both those stocks would be in focus because the net profit declined over 30% and over 60% respectively. JK Lakshmi Cement, the profit was down 47%. And a couple of other reactions include something like Ingersoll, NDTV Q2 earnings, where the net loss widened on a year-on-year basis. Pidilite, where the net profit was up 9%. Navneet Education, profit was 16.6 crores, so we need to see any sort of aberration there. Voltas, profit was up 22 odd percent. Snowman Logistics, the loss was 3.6 odd crores. Another couple of earning reactions include something like Future Consumer. Petnet LNG, good numbers, where the net profit was up 28% on a year-on-year basis. And Chennai Petroleum, where the net profit was around 315 versus 98 odd crores. Maybe we'll get Varinder to talk about it a little more. But nonetheless, those two numbers also look good.
All right, Ekta, thanks a lot for that. We'll keep an eye out on that. But as we speak, we have the Chinese data, which is flashing for you on the screen. The Chinese October PPI is at 6.9% versus a poll of 6.6%, as well as the CPI is about 1.9%. That compares with a poll of 1.8%. So let's take a look at the Shanghai as well as the Hang Seng markets. Both of them are fairly unmoved. 0.14% cut theirs, as well as a 0.66% gain seen on the Hang Seng. But the Nikkei, that one's moved to the high point of the day with a gain of 300 points. What that means is the SGX Nifty, which indicated a start of close to 5 to 7 points in the green, that one's moved up and indicates a start of close to 20 points in the green. We'll keep an eye out on these developments, but coming up ahead, we have the two-day GST Council meet which will begin in Guwahati today. We'll tell you what's on the agenda.
The 23rd meeting of the GST Council will be held in Guwahati starting today. Finance ministers of 24 states have confirmed their participation. Tax rates on 100 items are likely to be cut from 28%, with the GST Council set to approve sweeping changes, including simpler procedures and a single return filing form for small firms. Tipsy Jaipuria joins in with the details on what we can expect.
This time, the GST Council is going to deliberate upon thinning off the 28% tax bracket. What we understand from sources and top government officials that some of the key public interest and consumer interest items are up for review. There are about 100 odd items which are going to be reviewed by the GST Council. Currently in this slab, there are about 200 odd items, and some of the items which are up for review include construction material, plastic furniture, plastic goods, ceiling fans, electrical fittings, etc., which are goods of mass consumption. Government feels that this is the right time to take this effort to thin out this 28% tax bracket, because on the optics, these products are not fit enough to be in the higher tax slab. Government will deliberate on November 9 and November 10 to be precise. 9th November, officers meet and prepare a draft, and on 10th November, the draft will be put forward for the council for a formal nod. Apart from this, GST and issues of traders, including invoice matching, filing of returns, is also going to come up for a review, and the idea to allow a quarterly filing of GST for all companies is going to be debated upon. Remember, this is just an idea right now. The government or the GOMs have not taken any view on it. And also on the agenda is review of the composition scheme, the composition scheme hiking the threshold for small taxpayers from 1 crore to 1.5 crore. Already a GOM has met and has a view that this should be hiked from 1 to 1.5 crore of annual turnover, allowing them to file only 1% of tax. So all in all, a power-packed meeting on November 10th of the council, and key issues to be watched out for are the thinning of the 28% tax bracket, trying to bring out the tax incidence on a lower side. Back to you.
All right, a power-packed meeting indeed. We'll keep an eye out on every development that takes place there. But let's take a step back. A year ago, Prime Minister Narendra Modi, he announced the scrapping of high-value banknotes, which amounted to 86% of the currency in circulation, both the 500 and the 1,000 rupee notes. 1 year on, has the shock therapy of demonetization paid dividends? Well, here's Lata Venkatesh with the impact of demonetization on the Indian economy. Lata?
Well, the most obvious impact of demonetization is in the GVA or the GDP numbers. Before demonetization, the first quarter we grew by 7.6, 6.8. Third quarter is the demonetization quarter. Look at the sharp fall, 5.6% GVA growth in the subsequent 2 quarters. If you looked at the full year, of course, FY16 we had grown by 7.9. 6.6 in the year of demonetization. Some of the slowing was already happening because of the twin balance sheet problem, but economists estimate at least 1 percentage point is because of demonetization, and this is only the formal sector. The informal sector comes in the third estimates of the GDP, and that at that time perhaps the GDP would be low, or the GVA will be lower by maybe 1.2, 1.3 percentage points. That's a loss of about 1.5 lakh crore to 2 lakh crore rupees. Did we make up that much money by impounding black money? Okay, 15.4 lakh crore went out of the system. We got back 15.28 back into the system. No impounding of black money there. Okay, they came back to the accounts. They will pay taxes. How much taxes did we collect? Look at the personal income tax numbers. In FY16, the personal income tax grew by 17.8. In FY17, year of demonetization, so much money came into the banking system as deposits. The growth of income taxes 16.4, less than the previous year. Number of new taxpayers added. In FY15, it was 7.8, FY16, 10 million, FY17, 12.6. You know, it has been rising. It did not rise very sharply in the year of demonetization. And finally, income tax collection in the current year. First half of FY17, income tax collections grew by 17%, and this year, in the first 6 months, it's grown by 14%. What do we have to show by way of tax collection? Clearly, nothing to make up for about the 2 lakh crore that we lost by way of GDP output.
Okay, all right, Lata, thanks very much for that. But we spoke with Niti Ayog's Vice Chairman, Rajiv Kumar, as well as the former Finance Minister, P. Chidambaram, on their demonetization verdict. Listen in.
This was the only way of what I call of draining the swamp and pushing back and reversing the tide of illegality, and sort of, of black money generation in the economy, and pushing back the pervasive culture of tax avoidance, of doing all kinds of indulging in all sorts of activities which couldn't be accounted for. So for me, it's a historical move for cleansing the economy and making it much more transparent and based on ethics and normal economic activity.
All that I see is desolation and devastation. So the question of missing the wood for the trees doesn't arise. If you wanted to move towards a cleaner, more tax-compliant economy, that is entirely possible without heaping misery on millions and millions of people. 15 crore workforce in this country is casual labor, daily wage labor. Those 15 crore were immiserized for several weeks. Small businesses have been virtually wiped out. We don't know yet whether 5.7 is the bottom of the decline. The fact is, for 6 quarters, it has declined from 9.1 to 5.7. That's a fact. Whether it will turn up or continue to decline is a matter of speculation. It's quite possible that the next quarter may show 6.2, 6.3. It's possible that the quarter after that may decline to 5.9. We have to wait for trends. We did not say anything until we saw a 6-quarter decline. Whichever way you look at it, demonetization was a gross mistake. India cannot afford, the loss is not 1%, the loss is close to 1.5%, maybe close to 2%.